Good morning, class, and welcome to your financial market class. So today, we are down to our last topic called international financial markets. So hopefully, you're able to follow the lectures over the past few weeks so that you'll be ready to take the final departmental examination. Okay, so the motives for using international financial markets. So number one, motives for investing in foreign markets. So economic conditions, exchange rate expectations, international diversification. No? So when we say diversification, di ba, sabi nga natin, do not put all your eggs in one basket. So therefore, by international diversification, we mean to expand business opportunities, not only in the Philippines, but also by looking at different opportunities overseas. No? So we can, well, throughout this session, we'll be discussing more of this international financial markets. So number two, motives for providing credit in foreign market. No? So in this case, um, we are in the point of view of someone who would like to lend money, no, in the foreign market. So ano ba yung mga motives by doing that? Number one, we have high foreign interest rates, exchange rate expectations, and obviously international diversification. Next, we have the motives for borrowing. So ito naman, tayo naman yung manghihiram ng pera in the foreign market. So low interest rates and exchange rate expectations. So class, when we're talking of the exchange rates, so simply, this is how we gauge, no, how weak or strong peso is, no, compared to the different currencies, no, so like the likes of US dollar, Japanese yen, or euro, or yung um, British pounds. So number one, ito na. So we go to the different international financial market. No? So number one, we have the euro currency market. So euro currency market is the money market for currency outside of the country where it is legal tender. Euro currency market is utilized by banks, multinational corporations. Ito, pag sinabi natin multinational corporations, meaning this is a company uh, that is present in different parts of the world. No, so like in the case of Xerox, as you know, Xerox says headquarter is in the U.S., but Xerox is also present in different parts of the world, no, including the Philippines. So mutual funds and hedge funds, they wish to circumvent regulatory requirements, tax laws, and interest rate caps often present in domestic banking, particularly in the United States. No? So basically, pag sinabi natin Euro currency market, ang sinasabi lang pala dito, this is a money market for currencies outside of the country where it is legal tender. No? So in this case, for example, we're talking about United States. No? So kung United States ang pinag-uusapan natin, it's USD. So if we're going to invest in um, another country where USD is not a legal tender, then we're technically entering into so-called euro currency market. So euro currency market originated in the aftermath of World War II when the Marshall Plan to rebuild Europe sent a flood of dollars overseas. The market developed first in London as banks needed a market for dollar deposits outside the United States. Dollars held outside the United States are called euro dollars, even if they are held in markets outside Europe, such as Singapore or the Cayman Islands. No? So don't be confused, no, class, kasi 'di ba the legal tender in the European continent is called euro, no, well, except for uh, um, some countries in Europe, no, so for example UK, kasi meron silang British pound, no, so when the US dollars are invested outside of the United States, we call it euro dollars, no? Even if they are held in markets outside Europe. No? So in this case, Singapore or the Cayman Islands. So interest paid on deposits in the euro currency market are typically higher than in the domestic market because the depositor is not protected by the same national banking laws. Kasi even in the Philippines, kasi, di ba, class, we have this so-called Philippine Depository Insurance Corporation, or yung tinatawag natin PDIC. So basically, PDIC um, guarantees or secures your borrowing, no? So for example, may nangyari doon sa bank where your a client, no? So kung may deposit, meron kang savings or deposits with that particular bank, sabihin natin na bankrupt or whatsoever, the PDIC assures, no, a certain amount of your money. So to the extent of 500,000 if I'm not mistaken. So ganun din yung nangyari dito sa euro currency market dahil nga walang mga ganong regulations, and therefore they are offering a much higher interest. Bakit nga ba? Kasi nga there are no other charges. No? They are not bound to follow different laws and regulations brought about by different laws, no, in a country. So rates on euro currency loans are typically lower than those in the domestic market for essentially the same reasons. Euro currency bank accounts are also not subject to the same reserve requirement as domestic accounts. So what are the different types of euro currency market? So we have euro dollar, euro yen, and euro bond. So kanina, 'di ba, pinag-usapan natin yung euro dollars, no? So basically these are USD held outside of the United States, even if they are not held in the markets, even if they're not held in markets outside Europe. So euro yen, for essentially, this pertains to the Japanese yen naman, no? So these are the Japanese yen held outside of Japan. Euro bond, basically it's bond being traded outside of a particular country. No? So for example, Philippine bond being traded outside of the Philippines. So the main benefit of euro currency market is that they are more competitive. They can simultaneously offer lower interest rates for borrowers and at the same time higher interest rates for lenders. That is mostly because euro currency are less regulated. Ganun naman palagi, di ba, class? Even in the Philippine setup, if there are too much bureaucracy, no? So that hampers actually business growth, no? And that's why if you're familiar or even if you're just reading, no, the current events or yung mga news natin recently, like for example, yung recent executive order by the president, no, um, granting exemption to visiting foreigners, no, yung VAT. Kasi imagine, 'di ba, sa ibang bansa naman, um, if you purchase a certain amount of goods, yung tinatawag nilang um, GST, yung counterpart natin sa VAT, they are being refunded. No? So, ang ginagawa ko lang, say for example, I travel to Korea. No? So, lahat ng mga purchases ko, inuipon ko yung mga receipt and then I go to um, parang a stall, no, in the airport. Doon nila kina-calculate how much will be your refund. No? So, in the Philippines, that is not the current setup, but then the president issued an executive order granting that exemption. No? So if I'm not mistaken, it will be up and running sometime in 2023. No? So that will steer foreigners to spend more, no, in the Philippines. And obviously, it will help the economic growth. No? So mostly because euro currency are less regulated. On the downside, euro currency markets face higher risks, particularly during a run on the banks. Eh kasi nga naman, 'di ba sabi natin the higher the risk, the higher the return. So in this case kasi they are not regulated. So um, um, yung yung bandwidth nila into exploiting different opportunities are there, but at the same time malaki rin yung chance of losing, and that's why they're offering a much higher interest, no, in return. Next, we have the Asian dollar market. So Asian dollar market, Asian banks that collect deposits and make loans denominated in US dollars. Kaya siya Asian dollar market, no? Next, we have the Euro credit market. Pag Euro credit market naman, it refers to the collection of banks that accept deposits and provide loans in large denominations and in a variety of currencies. The banks that comprise this market are the same banks that comprise the euro currency market. The difference is that the euro credit loans are longer term than the so-called euro currency loans. So basically, the only difference is the duration or the terms of the loan, no? So it's said to be that the euro credit loans are much longer in terms of the duration compared to the euro currency loans. Next, we have the Eurobond market, no? So a major sector of the unregulated capital market is the Eurobond market. Eurobond market is characterized by a direct transaction between borrowers and lenders, although the large banks play a major role in underwriting and placing the bonds. The market permits lenders to lend directly to borrowers across national borders without the intermediation of a bank. 1, 2. Okay, so Eurobond market, no. So let's talk about how the Philippine setup works, no. So basically, in the Philippines, like in the case of the government issuing treasury bonds, no. Ito yung mga government bonds natin, no. Like for instance, during the first year of the pandemic, obviously we needed to um, secure funds, no, for our pandemic response, no? So what the government did at that time is they issued treasury bonds through different universal banks, no? So one of which is the RCBC, no? So as a depositor of RCBC, I receive a notification from RCBC that that the government has issued treasury bonds, no? So there's an intermediation by the banks, no. But basically in Eurobond market, it's being characterized where um, a direct transaction between borrowers and lenders without the need of the uh, without the intermediation of a bank, no? So bank can however plays can however play a major role in arranging the transaction. So Eurobonds differ from foreign bonds in that the latter are issued in one country and its currency by a foreign borrower. By contrast, the Eurobond is issued in one currency, such as US dollar, the yen, the pound, the mark, or the Swiss franc, for sale in many capital markets, with the sale managed by an international syndicate of bank underwriters. So distinctive features of Eurobonds issues are as follows. So number one, the issue of Eurobond is in the form of placing rather than formal issuing to avoid national regulations on new issues. Number two, Eurobonds are placed simultaneously in many countries through multinational syndicates of underwriting banks who sell them to an investment clientele throughout the world. Eurobonds are sold principally in the countries other than the country of issue. Kaya nga, 'di ba, ganyan yung pinag-uusapan natin kanina, euro dollar, euro yen, and then eurobond, no? So, basically this is being traded outside of the issuing country. So, the interest in eurobonds is not subject to withholding tax, which is an advantage over domestic bonds owned by non-residents on which tax deduction is made before interest is paid. So actually, the very format of our financial market, no? So the uh, our subject is actually a U.S. setting rather than a Philippine setup. No? Next, we have the international stock market. So MNCs, so kanina 'di ba, multinational corporations or companies, these are um, entities or companies which are present in different parts of the globe. They can attract funds from foreign investors by issuing stocks in different international markets. Foreign direct investment or FDI. So these are FDIs or foreign direct investment is a purchase of an interest in a company by a company or an investor located outside its borders. No? So uh, for example, magandang example siguro nito is uh, siguro yung expansion na lang. And I don't think Jollibee is a good example. But as you know, Jollibee is expanding, no, in different parts of the globe. Pero I think those are still those branches or franchises are still owned by the Philippine entity. No? So generally, the term is used to describe a business decision to acquire a substantial stake in a foreign business or to buy it outright in order to expand its operations to a new region. It is not usually used to describe a stock investment in a foreign company. Ayun na, one good example would be the acquisition of Uber, no? So yung Uber, as you know, it's no longer present in the Asian market. They were acquired by Grab, no? Kaya ano, kung maalala nyo, when Uber closed its operations in the Philippines, 'di ba parang na-monopolize ng Grab yung operations ng TNVS in the Philippines. At that time, sobrang tataas uh, nung charges ni Grab, no? Prior to the acquisition, may competition, no? So well, up to these days, ganun pa rin, no? I think it's being monopolized by Grab, no? Even though meron ng mga other TNVS players, no? Still Grab is um, a much bigger company. Foreign direct investments are substantial investments made by a company into a foreign concern. The investment may involve acquiring source of materials, expanding a company's footprint, or developing a multinational presence. The US is second to China in attracting FDI. How foreign direct investment work? So companies considering a foreign direct investment generally look only at companies in open economies that offer a skilled workforce and above average growth prospects for the investor. Ito, kaya nga palagi natin naririnig, no, yung ease of doing business, no? Kasi nga the light government regulation also tends to attract FDI, no? Kasi sino nga ba naman yung gugustuhin mag-invest kung I mean, if the government involves a lot of procedures just to uh, set up a business entity in the country, no? So that's why at the moment there are still ongoing um, procedures being done in different parts of the government to streamline basically its services, no, uh, to attract investors. So what are the different types of FDI or yung foreign direct investment? So we have the horizontal, vertical, or conglomerate. No? So with horizontal direct investment, a company establishes the same type of business operations in a foreign country as it operates in its home country. A US-based cell phone provider buying a chain of phone stores in China is an example. Pag vertical investment naman, a business acquires a complementary business in another country. For example, a US manufacturer might acquire an interest in a foreign company that supplies it with the raw materials it needs. No? So basically, pag sinabi nating horizontal, we are establishing the same. No? Pag vertical naman, yung complementary. No? So siguro good example niyan will be if you're manufacturing bags, you will invest with an entity an entity supplying wool or yung mga materials to manufacture a bag. No? So that's vertical investment. Now, in a conglomerate type of foreign direct investment, a company invests in a foreign business that is unrelated to its core business. Since the investing company has no prior experience in the foreign company's area of expertise, this often takes the form of a joint venture. No? So remember, class, in a joint venture, two entities or two or more entities pool their resources, no? At in one entity for, well, obviously for the motive, no, to get something out of it, no. In this case kasi, since wala kang expertise in that particular line of business, then you have to simply provide resources, no. So baka ikaw yung financier, and then um, the other party in the joint venture will be the ones still operating the business. So next, we have the country risk premium. So understanding the country risk premium. Ano ba yung country risk premium? So this is the additional return or premium demanded by investors to compensate them for the higher risk associated with investing in a foreign country compared with investing in the domestic market. So paano yan? Ganito lang naman yung class. For example, you have, 'di ba, madalas natin na pag-usapan natin do sa pag-compute ng interest rate before, no? Ang dami palang factor to calculate your interest, no? So kung naalala niyo yung discussion natin, meron dong default premium, inflation premium, no? So now we're talking about country risk premium kasi we're looking at international market, no. So we're looking into expanding our business, not just pag sinabi kasi ng domestic, within the country lang yan, no. When it's international, meaning we would like to be present, no, in different parts of the globe. And that's why kung ganun yung magiging mindset natin, then we have to understand this country risk premium. No? So ano ba yung additional return or premium? No? If we say, for example, we are an entity in the Philippines. No? So kung ito yung return of investment in the Philippines, sabi natin 5%, how much is the um, rate of return if we invest, say, for example, in Thailand or in Indonesia? No? So overseas investment opportunities are accompanied by higher risk because of the plethora of geopolitical and macroeconomic risk factors that need to be considered. These increased risks make investors wary of investing in foreign countries, and as a result, they demand a risk premium or for investing in them. The country risk premium is generally higher for developing markets than for developed nations. Ito naman, class, parang logical to, no? That it's more risk more risky to invest in developing markets. So when we say developing markets, these are um, well, like the Philippines, no? It's a developing market, no? And yung GDP natin is growing, no? I think we are the uh, fastest growing economy in the region in Southeast Asia, no? So um, and obviously the country risk premium is much higher in the Philippines compared to the likes of Switzerland, United States, no? Singapore, Korea. So country risk encompasses numerous factors, including political instability, economic risks such as recessionary conditions, higher inflation. Ito yung madalas nating naririnig sa news ngayon, no? So I think we are at 7%, no? So para lang maintindihan pa natin how inflation really affects us, no? So imagine tumataas yung presyo ng bilihin by 7% and yet your parents salaries, no, stay put, no? So kung halimbawa yung 100 pesos na 1,000 pesos na lang ngayon, kung marami ka na nabibili, imagine all the prices going up by 7%, no? So yung purchasing power mo will decrease, no, in relation to the inflation. Sovereign debt burden and default probability. We have the currency fluctuations, so another issue in the Philippines, no? So at least ngayon mas bumubuti na compared last Q4 of 2022. Adverse government regulations such as expropriation or currency controls. So there are two commonly used methods of estimating the country risk premium. So we have number one, the sovereign debt methods. CRP for a particular country can be estimated by comparing the spread on sovereign debt yields between the country and a mature market like the US. So meaning to say, we just have to compare our results versus a developed country. Next, we have the equity risk method. CRP is measured on the basis of the relative volatility of the equity market returns between a specific country and a developed nation. So basically, class, when we're talking of country risk premium, obviously our comparison will always be the developed nation, and that's why CRP in a developing country is way higher compared to the developed nation, no? For obvious reasons kasi nga naman mas set up na sila. They are kasi tayo probably we're vulnerable in terms of riskiness, no? So like for example, yun nga yung pinag-usapan natin inflation, no? While Philippines is still an attractive market for foreign investors, no, yung business process outsourcing natin is still expanding, no? Pogo right now, kung napapansin nyo, lagi siyang issue sa Senate, and then even the finance secretary agreed with the Senate to stop the operations of the Pogo, no? Kasi um, maliit lang naman daw yung contribution sa total GDP. But then there are a number of employees, no? Filipino employees na mawawalan ng trabaho if they push through this closure, no, of these different POGO. Okay, so country risk premium for country A, spread on countries A, sovereign debt yield multiplied by the annualized standard deviation of countries A's equity index over the annualized standard deviation of countries A sovereign market or index. No? So for example, we have the yield of a 10-year USD denominated sovereign bond of 6%, yield on 10-year Treasury bond 2.5%, annualized standard deviation for country A's benchmark equity index is 30%, annualized standard deviation for country A's USD denominated sovereign bond index is 15%. No? So to calculate the CRP, So we will use this formula class. No? So let's just derive it. That's 6% less 2.5% multiplied by 30% over 15% or 7%. No? So ito naman class, we just have to derive this formula no, to compute for the country risk premium. So incorporating CRP into the CAPM. So CAPM is the capital asset pricing model. No? So remember, we have discussed this when we covered yung portion ng cost of capital, no? So sa equity. So sabi natin, there are factors within your CAPM that are being managed no, by the different profession. No? So all we really have to do is to make sure that we're able to derive those information into this formula. No? So the CAPM details the relationship between the systematic risk and the expected return for assets, particularly stocks. CAPM model is widely used throughout the financial services industry for the purpose of pricing of risky securities, generating subsequent expected returns for assets, and calculating ito na nga, capital cost. No? So you're very much familiar with this formula. We have um, discussed this no for a number of times. So if you still need to refresh your minds on this topic, then I suggest you refer back to our previous discussions on the cost of capital. No? So there's also um, an in-depth or more detailed discussion on the capital budgeting, which includes cost of capital. It's made available in our channel. No? So I will also share that with you so that you can have a look. And kung may free time ka, then you can watch those recordings on capital budgeting, particularly on cost of capital. Ito ang tinatawag natin CAPM. So there are three approaches for incorporating CRP into the CAPM. First approach assumes that that every company in the foreign country is equally exposed to country risks. So while this approach is commonly used, it makes no distinction between any two companies in foreign country, even if one is huge export-oriented firm and the other one is a small local business. So basically, paano na-incorporate ang CRP dito sa first approach, no? So kung napansin mo, they just added CRP no, dun sa formula natin to compute for the CAPM. No? Next, the second approach assumes that the company's exposure to country risk is similar to its exposure to other market risks. So how to compute that? So the risk-free rate plus the beta multiplied by the market rate less the risk-free rate plus the CRP. So again, class, kung naalala nyo, earlier we have uh, discussed the formula to get the CRP. No? Ito namang formula ng CAPM, it remains the same. No? So may nababago lang in terms of how to incorporate this CRP. And finally, the third approach considers the country risk as a separate risk factor. Multiplying CRP with a variable, generally denoted by lambda, in general terms, the company that has significant exposure to foreign country by virtue of getting a large percentage of its revenues from that country or having a substantial share of its manufacturing located there would have a higher lambda value than a company that is less exposed to that country. So yan, ito yung example, no? So CRP for country A is 7%. The risk-free rate is 2.5%. Expected market rate of return is 7.5%. Ito class yung kaninang example natin, no? So we have calculated yung CRP natin at 7%. Ang tinatanong ngayon sa atin dito is how are we going to incorporate that into our CAPM. So project beta is 1.25 now. So the cost of equity will be the risk-free rate of 2.5% plus a beta of 1.25 multiply by 7.5%, ito yung risk-free rate natin, or the expected market return, less the 2.5 o yung risk-free rate of 2.5% plus 7.0. 7.0, ito yung na-compute natin kanina when we have covered yung formula on the CRP. So the answer is 17.5%. Ito, class, remember, you are not required to know how to compute the project beta, the risk-free rate, or the expected market return. No? So there's another profession doing that. All we have to do is to make sure that we're able to derive it into a formula. No? So yun yung expected sa atin as an accountant. Okay, so next we have cryptocurrency. So cryptocurrencies are digital assets created using computer networking software that enables secure trading and ownership. Ang very popular nito is yung Bitcoin, no? So I'm not sure if you're familiar with cryptocurrency, but during pre-pandemic pa, parang ano na to, naging uh, widely popular, no, at that time, no. So yung Bitcoin at that time masyado pa siyang mababa compared ngayon, no. It's one Bitcoin is equivalent to you I'm not sure how much is it right now. I'm just checking my account, no, so tignan ko kung ilan magkano na siya. I can't share it class kasi nasa mobile phone ko. Basically, I use yung coins, no. So tignan natin yung medyo nakakaiyak ang cryptocurrency ngayon, down siya. So, ayan. So ang Bitcoin, one Bitcoin is equivalent to saan ko ba? Laki na class. One Bitcoin is equivalent to 1,243,592. Pre-pandemic, nasa 40,000 pesos lang siya. Tapos imagine, no? Kung invest ka at that time, meron ka ng million, no? Right now. And down pa, no? Kasi tumaas pa to ng gano'ng kataas yung umabot pa ng 1.3 last 1.3 million. So imagine. Okay. So Bitcoin and most other cryptocurrencies are supported by a technology known as blockchain, which maintains a tamper-resistant record of transaction and keeps track of who owns what. Public blockchains are usually decentralized, which means they are operated without a central authority such as a bank or government. The term cryptocurrencies comes from the cryptographic processes that developers have put in place to guard against fraud. These innovations address a problem faced by previous efforts to create purely digital currencies, how to prevent people from making copies of their holdings and attempting to spend them twice. So ito na nga yung pinag-usapan natin, Bitcoin, Ethereum, Tether, BNB. Ito, yung market capitalization niya. No? So Bitcoin is really the number one. Meron ako ngayon Bitcoin, Ethereum, and XRP. No? Pero konti lang. No? So hindi naman siya yung... I wasn't able to participate in cryptocurrency prior to pandemic. No? So very recent lang din. So masyado na mataas na nakabili ako. So what are the advantages of cryptocurrency? So supporters see cryptocurrencies such as Bitcoin as the currency of the future and are racing to buy them now, presumably before they become more valuable. No? So I think no, at the time of the writing of our textbook, baka ito yung pre-pandemic time. No? So kasi it's really pricey right now. It's much valuable now compared before. So some supporters like the fact that cryptocurrency removes central banks from managing the money supply, since over time these banks tend to reduce the value of the money via inflation. So other advocates like the blockchain technology behind cryptocurrencies because it's decentralized processing and recording system can be more secure than traditional payment systems. So some speculators like cryptocurrencies, they're going up in value and have no interest in currency's long-term acceptance as a way to move money. Ito pala, no? Even yung GCash, they're going to open, no? A platform within the platform where you can invest in cryptocurrency, no? So silipin niyo 'yun, no? Kasi I think GCash is everywhere, no? So lahat yata tayo naka-GCash na, no? Kaya mas magaan na 'yung pagta-transfer ng money. So some cryptocurrencies offer their owners the opportunity to earn passive income through a process called staking. Crypto staking involves using your cryptocurrencies to help verify transactions on a blockchain protocol. Though staking has its risks, it can allow you to grow your crypto holdings without buying more. So ano naman yung mga disadvantages? No? So sabi nila, many cryptocurrency projects are untested and blockchain technology in general has yet to gain wide adoption. If the underlying idea behind cryptocurrency does not reach its potential, long-term investors may never see the returns they hope for. So ito naman yung parang ano 'to yung mga pain, no? Kasi, well, it's still starting. No? So for short-term crypto investors, there are other risks. Its prices tend to change rapidly, and while that means that many people have made money quickly by buying in at the right time, many others have lost money by doing so just before a crypto crash. So ito yung pinakamasakit. No? So it happened during the pandemic. Sobrang taas ng cryptocurrencies at one point in time and then biglang bulusok pababa. No? So yung mga nakapag sabi natin withdraw when it was sky high, happy. No? Pero nung bumagsak, oh my gosh. So those wild shifts in value may also cut against the basic ideas behind the project that cryptocurrencies were created to support. For example, people may be less likely to use Bitcoin as a payment system if they are not sure what it will be worth the next day. The environmental impact of Bitcoin and other projects that use similar mining protocols is significant. So a comparison by the University of Cambridge, for instance, said worldwide Bitcoin mining consumes more than twice as much as power as all US residential lighting. Some cryptocurrencies use different technology that demands less energy. No? So ito na yung, this is very specific to Bitcoin. No? So governments around the world have not yet fully reckoned with how to handle cryptocurrency. So regulatory changes and crackdowns have the potential to affect the market in unpredictable ways. So obviously, if cryptocurrency continues to gain momentum. Like in the Philippines, it will be for sure in the future subjected to different taxation. So ganun naman palagi. Offshore banking unit o yung tinatawag nating OBU. So this refers to bank branches located outside of its home country and handling transactions made in foreign currency or generically known as euro currency. So ito pala yung OBU, no? OVUs make it easier for individual and businesses to bank internationally and establish offshore accounts. Individuals may choose to keep their money offshore if there is instability in their own country and they fear losing their investment. So ito usually yung ginagawa if kung merong mga recession, no? Especially in a particular country. Offshore bank accounts must be declared to the holder's home country for tax reasons. However, some countries allow foreigners to earn capital gains tax-free. So sa Philippines, as you know, kung ikaw ay Philippine citizen, so lahat ng mga income mo inside and outside of the Philippines are subject to tax. No? But that's another subject. So um, you will learn more of that in your taxation classes. World Bank Group, or WBG, is a family of 5 international organizations that make leveraged loans to developing countries. It is the largest and the best known development bank in the world and an observer at the United Nations Development Group. So the bank is headquartered in Washington, D.C. in the United States. It provided around 99 billion in loans and assistance to developing and transition countries in the 2021 fiscal year. The bank's stated mission is to achieve the twin goals of ending extreme poverty and building shared prosperity. Total lending as of 2015 for the last 10 years through the development policy financing was approximately 117 billion. So ano yung 5 organizations within the World Bank Group? So number 1, we have the International Bank for Reconstruction and Development, International Development Association, International Finance Corporation, Multilateral Investment Guarantee Agency, and the International Center for Settlement of Investment Disputes. The first two are sometimes collectively referred to as the World Bank. No? So, as a developing country, no, so Philippines is one of the recipients, no, of these loans. No? So, di ba marami tayong mga loans with World Bank. No? That's why yung mga ratings, no, yung credit ratings by um, S&P, no? So it's really crucial, no? So that we maintain our credit rating, so that we'll be able to secure easier loans, no, from World Bank. All right, so that ends our session for today. Again, if you have any questions, please feel free to send me a note, no, via my personal mail, markgibson.manawis@yahoo.com.ph, or you can course it through your class Speedle. No? So that would be all for today. Thank you for attending our session. Stay safe and stay healthy. I'll see you again next time. Goodbye.